This is Jerry, ForexTradingMagic.com, and it's 1:22 a.m. Eastern Standard Time. The date is November 19th, 2009, and this is Section 3 on our series on supply and demand. Okay, in this section we're going to talk about single bar supply and demand. And what first thing we need to know about single bar supply and demand is what the bars represent. Okay, red bar equals supply, sellers. Green bar equals demand. Okay, everybody knows that, right? Okay. So now down here we take our lowest bar. Okay, and coming down, this means that from here down to here, okay, supply has overwhelmed demand. Okay, so now before we can get started back up, we have to know where demand must overcome supply. So if red bars are supply bars and green bars are demand bars, okay, when we came down here and closed this bar, this next green bar here is a demand bar. Okay, so now did demand overcome supply here? No, it didn't. We come to this next bar. Did demand overcome supply? See, until we have a close above the high of this bar, the supply bar, okay, supply still holds sway. And it wasn't until this particular bar that demand overcame supply. Okay, and that's what makes this a pivot. Okay. This is, if you go back to your LCM book, you will see that this is this bar from the complex pivot. Now, the high of the swing bar, this is why it's the pivot point. Now, anything else we talk about relating to the pivot, okay, or demand overcoming supply, will be about you getting in early or how you would enter depending upon what style of trading. Okay. But the main thing to understand here is that this is where this is where demand on a single bar basis overcame supply. And see, the swing levels, okay, they're reversed by single bar. Okay, and so this is why here it wasn't until this single bar here, okay, closed below this single bar here, because this is a demand bar. So now on the way back down here, supply has cleared or overcome demand here. So where should we expect price to stop and reverse back up, or at least attempt to stop and reverse back up? Well, we expect it to fall until it hits a demand level. Okay, and now this is where it gets tricky, because the market operates differently on the way up than it does on the way down. See, the trick is this, and I think this is the part that I need to explain better, that's kind of tripping a lot of you up when it's coming to your single bar support and resistance, is that this same bar, these same green bars, that on the way up, they are demand bars. Okay, on the way up, they represent demand or buyers. But on the way down, they represent supply or sellers. And why is that? Again, because they have to sell to exit their position. So on the way down, they are the sellers. On the way up, they are the buyers. And this is why you always hear people talk about the market is counterintuitive, but they never really exactly identify identify what that looks like on a chart. And so here on the way down, if we're short here, okay, where do we look to take profit? Okay, well, just as on the way up, the green bars represent demand or buying, and on the way down, they represent supply or selling. Well, it works in reverse with the red bars. Okay. Now, when price is moving, coming back down here, this bar here represents demand. Why is that? Because this is where the short sellers started to enter the market. And what's the only way they can exit their position? They have to buy. They are now buyers, so that on the way down, they represent demand. And now, for instance, a lot of you, you'll ask me a lot of times, this is one of my most common questions, is where should I get out? Okay. Well, you should get out when demand comes into the market if you're short. Okay. And if you want to stay in longer than that, and then that becomes a personal preference. I mean, no one can really tell you exactly where the market is going to stop, okay? But you can have a high probability range, okay? We know that on the way down, we don't know that the market will stop here, okay? But we know that if the market is going to stop, it's going to stop where demand comes into the market. So on the way down, red bars represent demand bars from a single bar perspective, and green bars represent supply bars. Okay? And again, it works the same way in reverse. Okay? On the way down here, these red bars, they're supply bars. But when price starts to move back up, okay, they are demand bars. And we already talked about why they are demand bars. So, and this is what helps the market go up. We have new buyers coming in on demand. Okay? Then we have the short sellers who are now on the demand side, okay, coming into the market buying also, and that fuels the market back up. Okay, so I hope I've made that clear, why the market is counterintuitive and how the market behaves different on the way up than it does on the way down. Okay, now I'm going to end this section, section 3, on single bar supply and demand. Okay, we covered how on the way up, a green bar represents demand, and on the way down, a green bar represents supply. And we talked about how on the way down, the red bar represents supply, and on the way up, the red bar represents demand. Okay? Now,